Good morning, friends. Nalnakshi Swami here. Welcome to my channel, Smart Index Edge. I'm coming up with, as usual, the Nifty levels for tomorrow, Friday, based on the India VIX. India VIX has cooled down still. Further, it has cooled down 1.34% to the level of 11.22. So, based on that, I've calculated all the levels in my previous videos. I've made video how to calculate the India levels by using the India VIX. So go to that video so that you can also learn and you can plot levels based on the India VIX. Now I've calculated these levels. You please mark on your chart. Daily high to be 22,646 and daily low to be 22,382. Next comes the weekly levels. Weekly high to be 22,864 and weekly low to be 22,160. So these are the levels marked. So the play was actually, it was little bit opposite. It straight away gapped up from this level to the level of 22,690. When I calculated yesterday in my video, it came up to 22,602 using the flip tool, but it has gone little bit higher than that. Even that also I had mentioned in that video. And yesterday, the daily low was, crucial level was 22,300. So if it were to be violated, we would have seen, that's what I made. We would have seen weakness in the market. What happened in the market is straight away gap up. How many points gap up? You can see, let me measure this. Straight away gap up to nearly 161 points gap up. That is more than 1 ATR. So after gapping up, it could not sustain. It started continuously selling off. And even I had mentioned this, it can take the liquidity sweep below this level. So I anticipated Nifty coming down first and going up. Instead of that, it has gone up and it has come down. It came down to the level of, you can see exactly 22,306 here. 306. It did not, little bit higher than the 22,300. It did not violate. Later, there was a speedy recovery after a brief consolidation of from 10 to 2 hours of consolidation. The market picked up and it went even almost 0.78% of the retracement, Fib retracement. So it went up to 22,537. Then there was a rejection. Market slowed down. It went into a range, and finally it has closed like this. Close to the level of 22,578. See, if I see the market structure, what is happening is, it is a bearish engulfing candle. And it is retest of this level. Trying to retest of this level, only this level, 22,619. If the Nifty crosses above that and sustains, then this bearish engulfing pattern will not be sustained. See, even here also, you can see a bearish engulfing pattern. After that, market gapped up. Here, bearish engulfing pattern. Here, there is a difference actually. It went past the, you can see over here. Same pattern, market is fractal. You can see there, it passed above this bearish engulfing pattern to make 22,529. And then it went into the consolidation and market. Now it made a bearish engulfing pattern and it has retraced 0.78% or 0.8% to the here, and it faced resistance, and there was correction in the market from 1:35 to 3 p.m. There was a push in the market. See, if you see the push, if I see this structure, see, this was a for the push, and then there is little bit breach of this liquidity, and we need to see this is a range actually. This entire thing is a range. Entire thing is a range after the breakout. After the breakout, we need to see what can happen in the market. Probably if it fails to cross above this is the order block over here, and it is consolidating below the order block. I've already discussed about this smart money concept, consolidation below the order block, and there was an FVG. If you can go there, you can see there is an FVG, this opening bell, and market could not tap into this order block. Probably what I'm expecting is in the market tomorrow is it can fail, consolidate little bit, and then it can come down, breaching the level of 22,306, breaching this level 22,306, and let me check what level it can go. What level it can go if it breaches this level. It has already breached this level. Okay, let me take the fifth tool and measure the levels. 2.618 is here, and 22,665 and 22,212. These are the possible levels. 22,265, which comes almost equal low. It makes the equal low over here. It can halt in this area. It may do that, or the whole lot of the day it can spend coming down like this, and you may see a pullback in this. So when it makes a equal low, or if it reaches this level straight away, it can go up to 22,212. Let me change the time frame to 2 hours to see any fair value gap over in this area, to see, because market usually, yes, we can see a fair value gap here. Market usually seek the imbalance. That is, this is the dynamic liquidity present over here. So there is a fair value gap up to this area. Fair value gap is here. Let me measure. Yeah, up to this level, 22,190. 22,190, or it can sweep this liquidity down. It may come down to 22,164 also. There is possibility. I had already discussed in my previous video, seeing the weakness, anticipated the weakness in the market. Probably tomorrow, this is a huge order block, imbalance, and the market has tried to go into that, and it has stopped below the order block here, if I change the time frame to 1 minute, I'll show you where is the order block. Yeah, this is the area of the order block. The buy orders have been blocked over here. Let me remove all these things. Let me extend this. Extend rectangle style. Yeah. Extend right. We'll see what has happened in the market. Let me go to the time frame of 15 minutes. See, this is the order block. No, some mistake I've done. Let me go. Again, let me go to 1 minute time frame. Yeah, here. And that was the order block for that period. And let me check here. Let me zoom it out. There is a fair value gap. Down. Here. So market after recovery has tried to go there. See, it could not go make up to this level, 22,586. It has fallen short of this level. There is liquidity available in this area. Static liquidity. Market can do something. It can tap into this liquidity, take the liquidity or the pending orders over here above 22,587 to it can even go up to 22,597, and then you can see some sort of weakness in the market. Probably it may fail to go there, and it may start its downward journey and sweeping this liquidity and going below, and it can come down to the level of 22,264 and 22,185, because this is the area of first. It can tap into this level 22,274. There may be a pause. There may be a pause and pullback can be seen, or it may close as a negative close at this end. This is what we can anticipate, but the market play, we need to see how the market is going to play tomorrow. Only the price action we can, after seeing the price action or the pre-market settlement, we can make some sort of assumptions and we can get prepared for that. But by seeing all these things, by seeing the order blocks and the FVG and all these things, I'm anticipating all these levels. It can go past like this. In this area, it may around 22,584 to 595. It may face some resistance. Either it can gap up like this or trade like this till 10 a.m. in the morning, till the RBI policy, and then it may start coming down. There is possibility. At least it will wait for the RBI policy. Market may not fall till that. If it gaps down, there may be a recovery in the market, and up to 10 a.m. it may go down and then it may come up. We do not know the play, but these are the important levels. I'm seeing weakness because it is this one. Bearish engulfing pattern. What is I'm seeing on the intraday picture. So these are the anyway. you mark all these levels, 22,864 to 22,164 is the wider boundary for the market. Okay, friends. Thank you very much. Nalnakshi Swami signing off.